Good evening students and happy new year to all of you. Today we are going to start a new chapter in OC. Chapter number first we have completed, then third we have completed, fourth chapter organizing completed, fifth staffing completed, sixth directing completed, seventh controlling already we have completed, first, third, fourth, fifth, sixth, seventh, eighth. Chapter number 8. So today we are going to start chapter number 8, financial management. Total 1, 2, 3, 4, 5, 6 chapters are completed out of 10. Total there are 10 chapters. 2 chapters are already deleted out of 12. Only 10 chapters are left. Out of those 10 chapters we have completed first chapter, then third, then fourth. First one is concept of management, then nature and nature of management. Third is planning, fourth one is organizing, fifth one is staffing, sixth directing, seventh controlling. Now 8th chapter financial management, new chapter. Now before explaining about financial management, today we are going to complete a topic, a small topic, easy topic of financial management, that is working capital, easy one. According to textbook, there is 8.4 working capital. In simple language, what is meaning of financial management? In one line I am telling you, financial management means management of finance, how to utilize finance. We are arranging finance from different sources like issue of equity shares, we are arranging money by issuing preference shares, we are arranging money by utilizing retained profit, that is also known as plugging back of profit. Such retained profit is also used in business. Beside this, we are borrowing money from different sources, for example by issuing debentures, by issuing bonds, by raising money from public deposit, by taking loan from financial institutions, by taking loan from commercial banks. The different types of methods to raise money. And what are the different sources of raising money? After raising money, after managing or arranging money, how to utilize such finance in the best possible manner so that we can get maximum result, maximum profit to the business. That management is called financial management, but we will discuss later on. Right now we are going to do a part of financial management, 8.4. Topic is working capital, easy topic. Now working capital. We all know that after collecting money or after arranging money from different sources, we all know what are the different sources. We have done in 11th standard. There are two methods to raise money. One is called owners fund and other is called borrowed fund. Borrowed fund. Owners fund, examples of owners fund, in short I am telling you, then we will start working capital. Owners fund example is equity shares, preference shares, or by using retained profit. Borrowed fund, in case of owners fund, we are not required to pay any interest. We already know about equity shares, preference shares and retained profit. If we are able to manage finance from these sources, equity shares, preference shares, retained profit, company is not required to pay any interest. In case of borrowed fund, examples are debenture, then loan from different sources. So on debenture and loan from different sources, company is required to pay interest. Whether company is enjoying profit or loss, भले कंपनी को प्रॉफिट हो या नुकसान हो, लॉस हो, कंपनी हैज़ टू पे इंटरेस्ट. So after arranging money from different sources, company has to invest such money on purchase of fixed asset, like plant and machineries, land and building. These are all fixed assets, or in accounting language this is called non-current asset. So after arranging money from different sources, company is required to invest such money on fixed asset or non-current asset like plant and machinery, land and building, different types of vehicles they need, and some part of investment, some part of arranged money they need to invest on current assets like purchase of raw material, then they need to sell goods on credit, means debtors, bill receivable. These are all current assets. So the part of arranged money which they are invested on current assets, that is called working capital. Means working capital is used in order to pay day-to-day expenses. Now comes to working capital, the part of arranged money which is invested on. First point, which is invested on various types of current assets or second, in order to pay day-to-day expenses. So when money is invested on various types of current assets or used or utilized in order to pay day-to-day expenses, such invested amount is called working capital. It's called working capital. Once again, what is working capital? Working capital is that part of invested amount which is utilized on various types of current assets or which is utilized in order to pay day to day expenses. जो डेली के एक्सपेंसेस होते हैं, फॉर एग्जांपल पेमेंट ऑफ वेजेस टू लेबर्स, पेमेंट ऑफ सैलरी, परचेज ऑफ रॉ मटेरियल ऑन कैश बेसिस. अगर हम परचेज कर रहे हैं रॉ मटेरियल कैश बेसिस पे, वी नीड टू पे इमीडिएटली. देन पेमेंट ऑफ इलेक्ट्रिसिटी एक्सपेंसेस, purchasing of raw material is an example of current assets. If you are selling goods on credit basis, so debtor, it becomes debtor is a current asset, we all know. Bill receivable is also current assets. So whenever we are investing, means such type of things means current assets. What is the nature of current asset or definition of current asset? Current assets are those assets which can be converted into cash quickly. Current assets are those assets which can be converted into cash quickly. For example, if you are selling goods to customer on credit basis, after 15 days, 10 days or maximum 1 month, we will get our cash back. Means debtor is converted into cash. Again we will sell the goods on credit. Again after a few days it is converted into cash. So working capital is continuously circulating in business. It is circulating in business constantly. How it is circulating in business constantly? If we take the example of fixed asset, for example, we have invested 10 lakh rupees for purchase of plant and machinery. It means we have invested 10 lakh rupees for a longer time of period, for 10 years, because estimated life of machinery, if we assume 10 years, 15 years, it means we have invested this 10 lakh rupees for a longer time of period. But that's why this is called fixed capital, the amount invested on fixed asset. The amount invested on fixed asset is called fixed capital, and fixed capital is invested for a longer time of period. But so far as working capital is concerned, it is circulating in business constantly. For example, in the month of March, we have sold goods for rupees 50,000, means this is called debtors. It means now debtor is 50,000. In the next month, out of those debtor or from those customers, we will get our cash 40,000. The 50 minus 40, now debtor remains 10,000 in next month. In the month of April, it remains 10,000. Again, in the month of April, again we have sold goods on credit for rupees 60,000. So total debtor becomes 70,000. In the next month, if we get our cash 65,000 back from the customer, now debtor remains 5,000. Means every month, constantly, regularly, debtor changes. In the same way, other current assets are also changing constantly. For example, clothing stock. In the month of March, in the beginning of March, total stock in the shop available is of rupees 1 lakh rupees. And in whole month, we have sold goods of 80,000. Now stock is of 20,000. Again we have purchased goods in order to run our shop. Suppose we have purchased goods of 1,10,000. Now stock becomes 1,30,000. Again we have sold in the whole month goods of 1 lakh rupees. Stock remains 30,000. It means current assets are changing continuously, constantly, and amount invested on current asset is called working capital. So definition of working capital or meaning of working capital is completed. The amount which is invested on various types of current assets, or the amount which are utilized in order to pay day-to-day expenses, such invested amount is called working capital. And such invested amount means working capital is circulating into business constantly, continuously. Now, next definition of working capital according to accounts. Working capital, we have done in ratio analysis, formula of current asset and current liability, current ratio. Working capital is the difference between current asset and current liabilities. Current asset means short-term assets, current liability means short-term liabilities. So daily we are purchasing raw material, we are selling goods on credit. In the same way, on daily basis we are borrowing money for short-term period, we are purchasing goods on credit, then after few days we are making payment, that is called current liabilities. So means money is utilized in order to purchase current assets or in order to pay current liabilities. Such invested money is called working capital. It is the difference between current assets and current liability, or in other words we can say excess of current asset over current liabilities is called working capital. So anyway you can define working capital. Once again, working capital is that invested amount. Working capital is that invested amount which is invested on various types of current assets or which is utilized in order to pay day-to-day expenses. Such invested amount is called working capital, and working capital circulates in business constantly, or we can say the value of current assets and current liabilities changes constantly. Now working capital is the, now technical language definition, working capital is the difference between current asset and current liability. You have already done in accounts working capital ratio. So working capital is the difference between current asset and current liability, or in other words, excess of current asset over current liability is called working capital. Now working capital is of two types. Working capital is of two types. Now next topic is types of working capital. Working capital is of two types. One is gross working capital, and second one is net working capital. Gross working capital and net working capital. These are the two types of working capital. Now what is gross working capital? Gross working capital is the sum of all current assets, such as purchase of raw materials. Purchase of raw material means purchase. In accounts we are saying purchase. So purchase of raw material or purchase of finished goods. Purchase of finished goods. Why we are writing both purchase of raw material or purchase of finished goods? There are two types of business. Business दो type के होते हैं. One is manufacturing based business, other is trading based business. Manufacturing and trading. What is the meaning of manufacturing based business? In case of manufacturing based business, first of all, business units are purchasing raw material, then they are converting such raw material into finished goods. That is called manufacturing based business unit. Second one is trading based. The trading based business units are such units who are purchasing ready-made goods from other manufacturers, and then they are selling those goods to the customer in the market. So if it is of manufacturing based business units, so they will purchase raw material. If business unit is based on trading, then they are purchasing finished goods, ready-made goods. So gross working capital is the sum of only and only current assets, like examples are purchase of raw material or purchase of finished goods. Then debtors. What is the meaning of debtor? When we are selling goods on credit basis to the customer, such customers are called debtors. Sometimes they are also known as bill receivable if we are issuing bill receivable to them. Then stock, closing stock. You all know the components of current assets: cash, bank, debtor, bill receivable, closing stock, prepaid expenses. These are all current assets. So total of only and only current assets. Here current liability is not considered. Current liability will not taken. Only the total of current asset is called gross working capital. Simple definition is there. Gross working capital is the sum, is the total of all current assets. Then you have to give examples of current assets like debtor, stock, bill receivable, prepaid expenses, purchase of raw material, purchase of finished goods. Now what is net working capital? Net working capital is the difference which we have already done in the definition of working capital. It is the difference of current asset and current liability. Means net working capital, net working capital is equal to current asset minus current liability. So simply we can say that this is working capital. When we have to explain types of working capital, then in case of net working capital we have to write the actual definition of working capital. Current asset minus current liability is called net working capital. So what is net working capital? It is the difference, you have to convert into sentence. It is the difference between current asset and current liability. Net working capital, it is the difference between or difference of current asset and current liability. Then formula, net working capital is equal to current asset minus current liability. Now net working capital is of two types, A, B. One is positive net working capital, positive net working capital, and other is negative net working capital. Now what is positive net working capital? What is the definition? What is the meaning? So before that, try to understand what is the formula of net working capital? Current asset minus current liability. For example, if total of current asset is 60,000 rupees, total of cash, bank, debtor, bill receivable, closing stock, prepaid expenses is 60,000 and total of current liability is 50,000. Now what is the formula of net working capital? Current asset minus current liability. Current asset minus current liability is 10,000. So here our answer is positive. That's why it is called positive net working capital. Positive net working capital. It means definition is when current asset is more than current liability, it is called positive net working capital. Means in our example 10,000 is positive answer, that's why 10,000 is called positive net working capital. Net working capital. So what is the definition of positive net working capital? Net working capital is the difference between current asset and current liabilities, and if current asset is more than current liability, in that case it is called positive net working capital. Now what is negative net working capital? Just assume that current asset is of 60,000 and current liability is of 70,000. Now what is net working capital? We have to calculate net working capital. So this is the difference between current asset minus current liability. So 60,000 minus 70,000 minus 10,000. So if here our answer comes in negative, that's why it is called negative net working capital. Now add negative. What is the meaning of negative? When current liability is more than current asset, in that situation it is called negative net working capital. So definition is when current liability is more than current asset, when current liability is more than current asset, it is called negative net working capital. So these are the two types of working capital. Gross working capital, here in gross working capital we are taking only and only current assets. We are not taking any difference between current asset and current liability. It is the sum of only all current assets. Whereas net working capital, it is the difference between current asset and current liability. That's why formula is net working capital is equal to current asset minus current liability. Net working capital is of two types, positive net working capital and negative net working capital. Positive net working capital, when current asset is more than current liability, then it is called positive net working capital, and if current liability is more than current asset, then it is called negative net working capital. So these are the two types of working capital. So these are the different types of working capital. Once again, working capital means amount invested on different types of current assets or in order to pay day-to-day expenses. Such invested amount is called working capital. Working capital is of two types, gross working capital and net working capital. Now, what is the difference between gross working capital and net working capital? That is the new topic, difference between gross working capital and net working capital. Gross working capital and net working capital. Now, what is the difference? First, we all know meaning. It is the sum of all current assets. Second, net working capital, we know definition. It is the difference between current asset and current liability. The first difference is completed. Gross working capital is the sum of all current assets. Then you can give examples also, such as purchase of raw material, purchase of finished goods, debtor, bill receivable, stock, etc. And net working capital, it is the difference between current asset and current liability. Now, second difference. Gross working capital does not give true idea, or we can say clear picture about liquidity position of the company. It does not give true picture, a clear picture regarding liquidity position of the company. This company, and here it gives true picture of liquidity position of the company. Now, how gross working capital is not giving clear or true picture about liquidity position? Liquidity position means if we want to know how much cash is available with us right now on a particular date, how we can come to know about the liquidity position. For example, current assets is of, suppose we have cash, total cash we have 50,000 on a particular day. Total cash we have 50,000 rupees, and on the same day we need to make payment to supplier, means creditor. We have to make payment to creditors 40,000. It means today we have 50,000. Out of that 50,000, cash is a current asset and creditor is a current liability. So total cash we have on a particular day, for example, today we have 50,000 rupees. Out of 50,000 rupees, today we need to make payment to creditors 40,000. So after making payment, we are able to know that today we have 10,000 rupees cash in hand, means cash is available with us, only 10,000 rupees. So by deducting current liability from current asset, we are able to know how much cash is available with us, so that we can utilize this 10,000 in some other matters. But in case of gross working capital, we are taking only sum of all current assets, means it is the addition of only and only current asset. We are not deducting current liability. That's why we are not able to get this result. Means we are not able to know how much cash is available with the business on that particular date. Means we are not able to know the liquidity position of the company due through gross working capital. But in case of net working capital, it is the difference between current asset and current liability. That's why after deducting current liability, we are able to know how much cash is available with the business unit on a particular date. Means we are able to know liquidity position of the company through net working capital. Third one is it does not give clear picture of financial position of the company. But here it gives true picture of financial position of the company. One more point is left. We will try to complete fourth point in next lecture. Here right now it does not give clear picture of financial position. Now what is the meaning of financial position? The financial position may be sound, means may be strong or may be weak on a particular date or in particular month. For example, 50,000 minus 40,000. Right now cash is available with us 10,000 on a particular date. Or we can take particular month. Total in a month we have 50,000 rupees inflow and outflow is 40,000. So at the end of the month we have 10,000 rupees. Means 10,000 rupees is available with the business. It is cash in hand. This is called cash in hand. It means financial position is strong. So by deducting current liability from current asset, we are able to know how much cash is available with us. If cash is available with us, then we can say there is strong or sound financial position of the company. But because in gross working capital, we are taking only and only current assets. We are adding only current assets. We are not deducting current liability from current asset. That's why we are not able to know the financial position of the company, whether it is sound or weak. But in case of net working capital, we are deducting current liability from current asset. If answer comes positive, we can say that there is sound financial position of the company. And if answer comes negative, means negative net working capital, then we can say there is weak financial position of the company. So through net working capital, we can get clear picture about the financial position of the company. So one more point is left. We will try to complete in next lecture. Till then, any doubt you can ask.